Dear audience, welcome back again at the Budapest Eurasia Forum 2024. After the high-level keynote speeches, it is now time to dive into our agenda for today. Let us begin with our first panel titled The Financial System of Tomorrow, Geopolitics, Digitalization and Cooperation in the 21st Century. In this panel, our esteemed speakers will explore the future directions of the financial services and the broader financial system, examining strategies to build a more resilient and adaptable financial landscape. They will tackle key questions, including, with the rise of digital payments and central bank digital currencies, or CBDCs, what exciting innovations can we expect in the global financial system that will redefine how we manage and access money? Dear audience, it is my pleasure to greet the moderator of the panel, Mr. Lajos Barta, Executive Director responsible for the financial infrastructures and banking operations of the Magyar Nemzeti Bank. Beside his duties at the central bank, he is also the chairman of the supervisory board of the Hungarian Stock Exchange and member of the Hungarian Automated Clearing House's supervisory board. Welcome, Mr. Barta. Starting the panel, we will hear a very inspiring fireside chat discussion between Mr. Barta and two guest speakers. First, I would like to invite Mr. Ronit Guz to join us on stage. Mr. Guz is the Managing Director and Global Head of Future of Finance at Citi Research. He is also an advisor to various governments, universities, VC investors and tech firms in the UK, UAE and Africa. Prior to joining Citi, he worked at the British Bankers Association and was a research assistant in the UK Parliament for a former Prime Minister. Mr. Guz, please come on stage. Please also give a warm welcome to Mr. Sopnendu Mohanty, Chief FinTech Officer of the Monetary Authority of Singapore and Group Chief Executive Officer Designate of the Global Finance and Technology Network. Mr. Mohanty is responsible for creating development strategies, public infrastructure and policies around technology-driven innovation and has over 2 decades of public and private sector experience in technology, operations, digital finance and investment strategies. Welcome on stage. Mr. Barta, dear speakers, the floor is yours.
Thank you very much, and welcome my colleagues. We will not be able to cover all the agenda items which is on the topic, but at least try to find some interesting topics. 2 weeks ago, there was a festival in Singapore called Singapore FinTech Festival, and all of us were present at this festival. And this festival is a big gathering for newcomers, for traditional players, for all companies who are active in the field of financial services, from payments to AML and to mobile applications. So a lot of new interesting issues we have seen. There were a lot of presentations, panel discussions, insights, and a lot of new technologies and products which will be introduced maybe in the next years in the financial sector. I would like first to ask you, what were the most interesting topics in this festival for you? What did you think? What might be the promising megatrends, technologies, products that may have a real chance to transform a bit the current monetary regime in the next 5-10 years? And since Sopnendu, you are one of who created this festival, and you were the host of the festival. So first, maybe I turn to you to...
I thought you'll ask our consumer to tell us first.
No,
you mind?
No, Sop, you should go first.
Oh, and then you'll say no. Okay.
Then I can disagree with what you said.
Thanks for inviting us, and I really thank MNB be part of our journey at the Singapore FinTech Festival for so many years, and we are part of this program, Eurasia Forum. Well, if I had to crystallize in 3 or 4 headline what happened in SFF, I think the first thing was the timing of Singapore FinTech Festival. It was right at the heart of US election. And of course, when it happens at the heart of US election, the topics will look at the post-geopolitics impact of technology and how does it going to shape. So big part of the discussion was, is technology going to get bifurcated post the change in US leadership? That's one big topic. The second one was AI. And when it comes to AI, large part of the discussion was how far regulators are going to go when it comes to regulating AI. Because when you over-regulate, you don't get the intended outcome you're looking for. So there was a lot of discussion around AI, impact of regulation, and where does it end up with. The third was, which interesting to me, is the rise of the discussion has come back to the mainstream, is the digital currency. And where does CBDC end up with? Where does stablecoin play a big role? And does it impact the long-term thinking around CBDC? And of course, it is overlaid on the role of creating domestic payment network connected across the border, a big part of effort in Asia. And the last part was, I would say, for the first time, I found that the audience were actually interested to know the future of finance when it comes to sustainability. I remember in the last 6 or 4 edition of Singapore FinTech Festival, when the topic is sustainability, 5 people show up. This is the first time the room which was discussing sustainability is filled with people, which means there's a genuine shift in the mindset of people when it comes to sustainability. I think that's a huge, huge positive indicator of how things are going to shape in this space. That's it.
Thank you. Ronit.
Yes, and again, thank you, MNB, for hosting us here. It's a real pleasure to be back at this event. I would double-click on AI. Swapnendu asked me to host a panel on your main stage about AI and financial services, and this is going to be a game changer. So I know it's often overused, the term game changer. Every couple of years, we have a new hype cycle, blockchain, crypto, CBDC, quantum now. But I think AI is one of those general purpose technologies, a bit like when we were younger. Sops is still young, but when I was younger, consumer internet. Remember when consumer internet, when did we get our first computer at home or in the office? That changed the way we lived and worked. In the 1990s, the early 2000s, we began to do things online that we had for millennia done in person. Shopping, finding friends, dating. This was all done person to person, and we did it on computers. And that led to the creation of the new fintechs, the OGs of fintech. So in the Asian time zone, the growth of Alipay and financial. In this time zone, the likes of the Klarnas from Sweden. In America, PayPal. They all came to solve one need. And that one need was, how do I do e-commerce fulfillment on the finance side and payments? Looking forward, and that created all these new companies and new services. The banks eventually caught up, and the MasterCards, the Visas. The same could be about to happen looking forward. Gen AI and AI, which we've been using in the finance industry for many years, as machine learning, wrapped into Gen AI, you could have complete game changers, particularly in small business, SMB banking, and in consumer banking. And I could talk for hours, I won't, but that was, for me, the most exciting thing at SFF. And there were some really good speakers in that area.
Just a quick one on the AI. There's a shift from large language model discussion to small language model. That was a significant shift on the technical discussion around AI. And that's quite significant because it answers the question of data problem of AI as you look forward. That's
and getting specialized answers, which are maybe cost effective, because that's the other big change. Yeah. In 2022 and 2023 at SFF or elsewhere, we'd be going, wow, this is amazing. Whereas now what people are saying is, how do I use it? How do I use it and do it in a cost-effective way without having the ow moment? So we're going from wow to how, and hopefully avoiding ow.
Thank you. Maybe I would also mention my experience, what was interesting for me. I am proud that maybe I was the first Hungarian in Singapore who made the first contactless payment with my palm. without any device, no card, no mobile, just my palm. So it was interesting, you know. This is a new technology being introduced by Tencent, and it's a pilot project in Singapore for this. So it was interesting. I am happy that you mentioned Alibaba, I mentioned Tencent. When we were working in the expo, or even if we are working in the global landscape of payments, we see that we have, or payments or services, financial services, we see that there are traditional players like the banks. And 15 years ago, basically, no one else was on the court, only the traditional players. But today, we have a lot of newcomers on this market. We mentioned a few, but we have hundreds and thousands of newcomers on the street. What do you think? Is there still play for newcomers? So is there still some areas in the financial services where there are some niche products or niche services where newcomers could enter the market? Or it's already full with the current fintechs who became giants, basically, and the traditional banking system? So when was it easier to enter the market? 10 years ago for a fintech company or today?
It's always easier 10 years ago, right? It's a bit like me trying to have a diet. It's always better if I'd had better food and more exercise 10 years ago, but you have to start at some point. So start now if you're trying to build a fintech. Also, like I said in my previous comments, Gen AI and other forms of AI are a disruption. It might be like the Precambrian explosion. We get lots and lots of new things arrive. And we have this every 10, 20 years. So 20 years ago, the OGs of fintech, the PayPals, the Alipays, they came out of e-commerce. 10 years later, we all have these, right? It's 2008 onwards. What happens after that? Early 2010s, you have the app-based fintechs, the Revoluts, the Monzos, the Nubanks that spread in their home country and around the world. So coming out of the UK, set up by immigrants, Revolut now has 50 million clients. I think Nubank has 2x that or 3x that number of clients coming out of Brazil, again set up by an immigrant to Brazil, a Colombian. There's a theme here, by the way. Smart talent who go to new countries and build things. And we don't know what will be the next mobile phone. Maybe it's mixed reality, maybe it's virtual reality, augmented reality, or some mix of AI and AR. So there's going to be change. That's the only constant. Now, when you look at fintechs versus banks and it comes to payments, I would say, and of course, most of you will know this because you've come to a central bank event, we tend to focus a lot on the consumer side when we talk about challenges to banks. It's probably worth remembering that most payments, most financial flows happen bank to bank and corporate to bank and bank to central bank. It goes from Citi's account at MAS or MNB to another bank. And so just the numbers, 98% of global flows in financial flows are bank to bank. There's a bank involved or a bank to a corporate. But what's growing and where the real innovation's happening is in the C2C, consumer to consumer or consumer to business. When you're sitting in Budapest or where I'm based in Dubai, and I'm purchasing something cross-border, there I'm typically using a fintech. And there's going to be a whole new generation. I was just sitting with a fintech in London. I won't mention the name to give them a plug, but sitting with a fintech in London just last Thursday. And this wonderfully smart founder was telling me, I've got a solution that's going to disrupt Stripe. And I was looking and going, hang on, Stripe is the poster child of payment fintechs right now. The Stripes, the Adyeens of the last 10, 15 years. He's saying, no. Stripe's now a big company. They're missing all these. There's always, every 5 or 10 years, you get entrepreneurs who come along and say, there's an incumbent. Just like we used to be the incumbents. In many areas in consumer payments, we're not the incumbent anymore. It's not the banks. It's actually the likes of Stripe. There's going to be, it's like every generation. It's like pop stars or football players, right? There's a generation in charge or the dominant, and then 5 years later it changes. So I think there's huge opportunity and technology is just speeding up. And so if you're building a fintech, go for it.
You know, I have a much more pessimistic view, okay?
Are you being a regulator now?
This is good for a fireside chat.
Okay. The pessimistic view, not from fintech perspective, because the role of central bank In many countries, progressive countries, central banks are playing a leading role in building public good, which will disrupt closed-loop fintech companies. Let me explain this. You go to India, you go to Singapore, you go to Thailand, they're all building national infrastructure for identity, trusted data, payment rails, small business access to data set. When this becomes a public rail, it's the fintechs and the banks, if they get the act together, the competition will have a very little margin of error. And which means that for the first time, banks who seem to have lost the race can come back and ride on this national infrastructure and compete at scale. So fintechs must, as Ronit says, they must discover something else. They cannot ride on arbitraging poor national infrastructure. Largely, that is the fintech story. They've arbitraged poor infrastructure, poor policy gaps, and that's why they're successful. Once the country central bank gets it right, that arbitrage will go away. They got to discover something else.
So fintechs used to arbitrage, you said, poor central bank, but actually also, even more so, poor commercial bank.
Yeah, absolutely.
Poor commercial bank service, infrastructure, experience. There's no point today saying, I'm going to build a Revolut from 2012, or I'm going to build a new bank from 2012, 2014, because we're 10 years on, right? So you've got to think about what do I build on? I'm not going to compete with UPI in India, for example, or something that MAS are building across Southeast Asia. What can I build that rides on top of it, that gets enabled? So in India, where both originally Sop and I are from, there was a generation of fintechs that grew up. Why? Because cheap data wouldn't have existed without cheap data. So what is going to be the equivalent of cheap data in the next 5 or 10 years? That will enable a whole new set of businesses. How does the consumer journey work? Does the consumer journey work? I threw it on the phone. Does it work like this? Or does it work, I'm looking through glasses? Or is it a hybrid reality? What is the payment in that? What is the financing embedded in that? So you've got to think about, finance is the output, it's not the input. You're doing something else and then finance comes in. So think about where that consumer journey or the corporate journey goes, and then what's missing, and then you build on it.
Thank you for mentioning the central bank, because this is my next question. Central bank digital currency, it became a hot topic. Yeah. Let's say again, 15 years ago, as far as I know, nobody was dealt with central bank digital currency. But when Facebook introduced the Libra idea, then suddenly everybody started at least to think of the digital central bank money. And today, according to the CBDC tracker, almost 90% of the central banks are somewhere in the phase, planning, studying, piloting, or went live. In my reading, this is a strong intervention from the central bank side to the payment world. And if the central bank or any public authority intervenes, there is a need, there is an argument, there is something which justifies this intervention, some inefficiency, some shortage, some problem. Do you think there is here something which justifies this intervention? So what do you think about this?
Well, this is where I would do the first call before we ask banks to step in. I think I'm going to make it shorter because we're running out of time. There are 4 traditional money which is getting a new avatar. Cash, retail CBDC, wholesale banking money, wholesale CBDC, banks deposit, tokenized deposit, what regulators in some part of the world have allowed to survive in a regulated way is well-regulated stablecoin. I think rest we don't need to discuss in this room. If you take this construct of avatar of digital currency on each of this type of money, why it is important? It reduces 2 things, settlement risk and make the process efficient because you're not reconciling anymore. It is a bearer instrument on a network. Now, why we should care for wholesale CBDC? Because from a very Asian experience, today Singapore has connected the domestic payment network with Thailand, with Malaysia, with India. BIS is putting a nexus infrastructure in place. they can reduce the cost of transaction from 15% to maybe 3 to 4%, but there's still a 4% cost structure. Where it's coming from? Reconciliation, settlement, and all the issues, and KYC, money laundering, checks. Can a central bank wholesale CBDC solve that problem by the ledgers getting accessed by multiple central bank? Answer is theoretically, experiment-wise, yes. So that's the reason why wholesale CBDC does make sense to be continued, discussed, deployed as a future way to settle cross-border payment settlement across different countries. Retail CBDC, I'm not sure. It depends on the market and their need. My biggest bet would be on my friends' institutions. Tokenized deposit. If they can get it right, they can dramatically reduce the TTS and GTS, all the costs that keep on complaining about, to a much more simpler system that will compete with stablecoin of the world if they get it right. Stablecoin, to me, is an efficient cross-border payment instrument as it stands today. Their biggest competition is with banks, the tokenized deposit. Now all yours.
Thank you. You should know that Sopnender used to work at Citi many years ago, so we do train the best before we let them go on to other things. So I've got 1 minute, 47 seconds. It's just way too complicated a topic to do in 100 seconds. Beyond saying, on top of what Sopnender is saying, the other use case for CBDC is programmability. Now, you can have programmability without tokens, but it's one use case. And in a way, if you're thinking from a central bank policy perspective, I'm combining fiscal and monetary policy. So during, it's like we had gift vouchers, gift tokens when we were growing up, right? Instead of giving me money, my family would give me book tokens. So in the hope that I would just go and buy books and not sweets, they could have given me £10 or £5, or actually there was inflation, so it was much less back then. They could have given me £2 or £5. I could have gone and bought sweets or chocolates. They gave me book tokens because, and CBDCs have that same kind of element. If you want, through programmability, you can say, this money only gets spent for food, not alcohol. But it raises all kinds of questions, right? Do I want that kind of control? We've already had, and of course, these two central bankers on the panel with me, I respect, but how much control do we want to give our officials on money? When I'm spending money on my private, I'm not doing cross-border money laundering or terrorist financing. I'm just going to the shop and probably doing it in virtual reality in the future. So I'm not convinced about CBDCs, but I see a reason, and it's very interesting, your earlier point, when did it start? If you look at the comments publicly by central banks, up to 2018, no one talked about CBDCs. And when they did, they said negative things. 2019, 2020, 2021, massive takeoff in public comments. Why? Facebook, COVID, and then, I shouldn't say it, but geopolitics. That's why.
I think the right term is not programmable money. It's called purpose-bound money. What we should build is not programming the money. It causes privacy issues. What we need to build is a money fungible as it stands today with a wrapper program which can restrict a certain direct benefit transfer for the right purpose. But I don't believe programming money itself is a good idea. It actually questions the fundamental privacy issue of the money.
Who sets the purpose? Does the MAS set the purpose?
No. The world can set the purpose. They can put a wrap. It can be registered. It can be regulated as we do today. But purpose can be, but especially for direct benefit transfer, when you're transferring money for public good, they cannot take the money and buy alcohol.
Yeah, but that was the great thing about banknotes. I can do what I want to. Like now when I go and try to use my credit card, it got ping, you're in the wrong merchant. We don't support that. You're like, oh, okay.
Don't buy alcohols. Yes.
Okay, so we run out of the time, but I have one final question with a short answer. Both of you are really working on the future of money. You even wrote a book on the future of money.
Thank you for the plug.
And now you go home after this Eurasia Forum, back to Dubai and Singapore. What is the first topic on your agenda to work on from tomorrow?
AI use cases. How do we, in practice in 2025, in finance, use it? Not the hype, not the how do we use it? That's the first.
I took a picture of your governor's slide, and he talks about building a Eurasian construct connected to Asia. That's what I'm going to work on.
The bridge.
The bridge.
Not M Bridge, the SOP bridge.
The new bridge.
Okay, thank you guys. Thank you very much for your insights. Give applause for the experts, and thank you very much for your attention.
Thank you, Mr. Barta, for leading this dynamic discussion with Mr. Mohanty and Mr. Goose. And it set a strong foundational tone for the upcoming panel on finance. Let me invite the moderator, first of all, Mr. Ádám Banai, Executive Director for Monetary Policy Instruments, Financial Stability and Foreign Reserve Management at the Magyar Nemzeti Bank. Mr. Banai, welcome. And I would also like to invite our panelists to join us on stage. First, allow me to introduce Mr. Johan Biedermann, Managing Director of the World Alliance of International Financial Centers. Mr. Biedermann is also the Managing Partner of FinTech Consult, a network of FinTech experts in Asia, Europe and Africa, supporting FinTechs in raising capital and expanding globally. He sits on the board of EastNets, a world-leading provider of compliance, payment protection and anti-fraud technologies. Welcome, Mr. Biedermann. Please also give a warm welcome to Mr. Varun Mittal, Head of Innovation and Ecosystem at homegrown financial services company Singlife. Prior to joining Singlife, Mr. Mittal was responsible for fintech business development in 130 emerging markets across the globe, and he is a co-founder of the Singapore Fintech Association and Asian Fintech Network. Welcome. Please also welcome on stage Ms. Xue Fiao, Executive Director of the Digital Economy and Green Innovation Research Center at Ant Group Research Institute. Ms. Xue Fiao leads her team to explore how digital advancements and green innovations transform businesses, economies, and societies. Prior to joining Ant Group, Dr. Fiao worked at the International Monetary Fund in Washington, D.C. Welcome again. Esteemed panelists, welcome. Mr. Banai, dear speakers, the floor is yours now.
Thank you very much. I'm in a very tough situation as we are running out of time. So I have to be much quicker, but I promise I will skip my thoughts and will focus on yours. So you will have every minute for share us what you think about these relevant topics. We will talk about digitalization. We had a very good introduction with the first panel, so I won't tell you my understanding, but just as an example, because Lajos was talking about paying with his palms and how digitalization is part of our life. It's a good story that I was getting into the stadium with my palms even 10 years ago here in Hungary. So digitalization became part of our life, not just in financial technology, but in everyday life as well. And my first question would be to Mr. Biedermann, who is responsible for international finance centers, has a great knowledge in this topic. And just as a general question, I would like to ask you, what do you see, which innovations are the most relevant today for these centers? What the new solutions you are looking for? Where do you see the biggest activity?
Adam, thank you very much for having me. I'm really excited also after the discussion we just heard to continue that trend. I'm also very much delighted to be on that panel. Let me maybe highlight I think it's a story which hasn't been told enough, their contribution to financial literacy. Yeah, let's focus on the topic we look at, and we see 5 mega trends. We published a paper on this, a white paper on the future of financial center and finance, looking at 2030 and beyond. And let me briefly summarize them because our time is limited, and just give one example. First, this goes without saying, financial technology or the digital transformation. This is a very important mega trend. We heard about CBDCs. I'm very much a supporter of wholesale CBDCs. I also did research on retail CBDCs like the digital renminbi, digital euro. But I have a 15 years history at capital markets as a stock exchange official. And what I want to see is atomic transaction, digital, so tokenized securities versus wholesale CBDCs. They will bring so much efficiency into our markets, 24/7 trading opportunities, and even we might see new locations worldwide for the FX trade, which then can be at least partially automated. But the other example I want to mention for the digital transformation is open finance. We are here in Europe, we have the FIDA regulation coming, and this will be a strong enabler when not only banks need to open up their bank accounts, but we have a regime for access to all kinds of financial data if the client allows. And client can be citizens, but also small and medium-sized enterprises. So this will be a big game changer. The second trend, and I separate this from the financial technology, is big data and AI. You can argue whether it's together or separately. I think AI in finance, like in many other industries, will change so much. We have issues with financial education, that a large part of our population is not so familiar with financial services, right? And sometimes buys the wrong products for pension age, whatever. My take is in a few years' time, we will have AI agents with real-time access to all kinds of data, which will take over 90% of all our financial transactions dealing with finance, because most of the people don't want to deal with finance. It's like going to the dentist. If we have an agent which, in a reasonably properly handle their financial situation, this will be a huge game changer. The third topic is sustainable finance, and we have the challenge of financing the net zero transaction. Here in Europe, we talk about securitization again after 2008, a topic on its own, too long for today. But of course, this is a huge undertaking, financing the companies and their transition. The fourth topic, it's regional development. And I don't know whether you like it or not, but my take is the next decade will be a decade of the financial centers in the global south. We have seen enormous development in Asia in this decade, while maybe the decades before were more the US and America based, but the next decade will be a decade of the global south, including many African financial centers. Not all, but some of them will be extraordinarily successful. There will be high growth and the investment banks will go there. And the last and final change is on talent and the future of work. It started during the pandemic with remote work, but there are so much challenges in terms of talent. We're just finalizing a report on talent, because young people, in former times, the financial industry always took for granted that the brightest young minds, they become investment banker or have another role in the financial industry. But this is changing. They have now other priorities, other values. And we need to still attract them to the financial industry with changing demands. Now it's much more open to be a data analyst and learn or work on AI systems, right? There's totally different skill sets. So these are the 5 mega trends I see.
Thank you very much. I was right to skip my introduction because it was much better than what I prepared. Just a quick question back about Africa, because it's very interesting to see that they skipped some stairs of evolution in the financial sector. So do you think that it will continue this way, and after mobile banking then turn to the internet banking and this type of financial technology solution?
Of course, it started very early with M-Pesa. Now in many countries, in some you have even CBDCs already up and running, like Nigeria with the e-Naira. But many companies have the solutions. What's currently happening is regional integration, that their payment solution which work in a whole region. And let's remind us, they all has different currencies. It's not like the Eurozone where it's much easier. Where they still see challenges, and this is maybe a call for the likes of Ent and others, is to deal with China or Asia in general. So there are many small and medium-sized companies in Africa who regularly deal with suppliers in China, and they have to manage those payments. And it's still very costly and complicated. In many cases, they have to go via Hong Kong and US dollar. So, and at the end, this is maybe 5% costs on top for the FX transaction, the transfers. We need more efficient solutions, hopefully also tokenized.
Thank you very much. I will turn to Mr. Mittal. Lajos and the former panel was talking about the role of fintech and how it evolved, and one of the remarks was, which I agree with, is that financial technology tended to find the existing infrastructure and some gaps in the regulation, and it gave a room for success. How do you see at all the role of fintech in the evolution of the financial sector and the digitalization? Because the other end is that because of the appearance of some of this type of solutions, what we see as the traditional banking had to react and develop their solutions for them.
Thank you so much. So, and the mega trends you shared give a very deep insight on that. I'll give you example of 3 problem statements which fintechs are solving, which traditional financial institutions struggle, and they impact society. One, I would say, is retirement. So the average age across Europe, most of the Asian markets, is increasing. So the problem you're facing now is you're going to live longer because healthcare has improved, nutrition is available, so you're going to live longer. You're going to live poorer because inflation has eaten away a significant amount of your savings, and it will continue to eat. So you're going to live longer, you're going to live poorer. And then you have healthcare, which will, healthcare is improving. So now you have so many different drugs and treatments, which will be more expensive. So you're living longer, poorer, having access, having visibility to healthcare, which is more advanced than your parents, which you will struggle to afford because your personal savings are getting depleted from the inflation. So it's a whole retirement as a problem. And traditionally, banks would say, okay, here's a insurance annuity product. Insurer will say, this is the product. Wealth manager will say, I don't know what a systematic withdrawal plan looks like, because how will you break it down into annuity? Across the world, if you look at, the government-funded pension plans are running out of money. You look at US, you look at Europe, they're incentivizing private plans. There's a perfect opportunity for fintechs who come in and says, okay, what do you want? You want insurance coverage, you want retirement planning, and you want some regular payouts for your older age to do this. We need to stitch together something which is a mix of wealth management, payouts, benefits, and we need a next generation of solution which does not exist today. And across the world, you need this as a problem. And the government-funded solutions are just not enough. The second one, I would say, is gig economy. So Singapore faced it firsthand, so we saw it there. Singapore has more than, in Singaporean context, we have only 2.2, 2.5, 2.3 million people who are in working age, of which 350,000 are self-employed. So roughly, I would say 15% of the working population, 15-20% is self-employed, which means they don't have any retirement benefits. They don't have employer benefits. So they get nothing from the employer because self-employed. 100,000 of them are working for food delivery, ride hailing, and it is the fastest growing segment. Even before COVID, it started, and COVID actually exacerbated, and it didn't go well. It didn't go back. You look at the reports from Lyft, Uber, Just Eat, Deliveroo, all of them have grown. You look in Japan, in China, you look at Meituan, all grown. Now these people are doing these jobs. They have no protection. If they are sick, they cannot go back to work. And they're one illness away from bankruptcy. So gig economy related solutions needs to be created because historical employee benefits doesn't work for these people. Banks don't give credit to them because they don't have a pay slip. You are delivering food, you don't have a pay slip. You have 3 platform accounts. So again, in Singapore, what we did was the first country where we mandated that the platforms are required to provide insurance to these people. They have to mandatorily contribute money to their retirement benefit plan for gig economy. So that gig economy is, as you mentioned, you're struggling on talent on one side, but the problem is these people don't have any coverage on the other side. So once they become old in 10, 20 years, you have a bigger problem. And the third problem, which I find which traditional do not solve, is a problem of Henrys. High earning, not rich yet. So we are creating a generation of Henrys. People are delaying the number of kids they will have. Fertility rates are declining. So people have more disposable income. But they are not rich enough to get the traditional wealth management. They are not poor enough to not have enough wealth. So the Henry generation is what we are dealing with. So these three problem statements, if I look at, they are beyond the traditional financial institutions and they are confused. This is private banking, retail banking, this is premier banking. Where do I segment this? These are new segments which the traditional financial institutions cannot handle. And that's where fintech companies are identifying they are not burdened by legacy. Historical bank has to fight between whose territory is this. The new fintech which comes from outside is like, I have no territory. This is all new for me. I am playing with clean slate. So those three things which impact the overall society across emerging and developed markets is where I believe fintech has a role to play. Of course, they will do whatever they have to do with CBDC and stuff because all the big banks are also there. So they have more resources. But these three are territories where banks will struggle. They have enough of their internal systems to navigate, and fintechs can build really good next generation solutions.
Thank you. When you started that we will live longer, I was kind of happy, but it's a pity you continued that we will live poor. So I'm turning to Ms. Fiao, because when we first met, it was in Shanghai in the Fudan Forum, and it was very interesting. To be honest, it was kind of the first time for me to get some deeper insight to the Ant Group, and it was fascinating how deep knowledge and a lot of innovation has the Ant Group. And as a kind of warm-up question, I would ask, what are the new direction, the new visions for the Ant Group? Also within different digital products. And as we were talking about Africa, I would also ask whether you have some plans around there for different regions in the globe.
Okay. So first, thank you so much for having me today. It's to attending such a wonderful event and the panel. Maybe let me start with providing a little bit details about Ant Group, who we are and what we have been done during the past 2 decades. Actually, 2024 marks our 20th anniversary. We started from Alipay in 2004, where we're providing digital payment solutions to the ordinary people in China, as well as to the small and micro-sized SMEs. So today in China, actually, we are very honored to serve more than 1 billion individuals, as well as like more than 53 millions of SMEs in China. And we're proud to say in China now we have the widest penetration rate almost across the globe, as well as we are offering the lowest like cost comparing to other countries. So the rates actually varies from 0 to 0.6, so depending on who you are. So that's on the very first front. And of course, this cannot be achieved without the sound infrastructure in China, as well as the enabling like policy environment. So what other countries? So actually, we not only can be served this achievement in China, but also we bring the technology and know-hows to globally, mainly in the emerging markets. And nowadays, we are focusing on more like Southeast Asia and South Asia, as well as East Asia. But for the Africa, responding to your question, actually, we work closely with M-Pesa like years ago, and also like trying to build up the digital infrastructures in terms of the mobile payments on that front as well. So I think that's the first decade, that's what we've been done. And for the second decade, during the past 10 years, actually we realized that our customers, not only they need the digital payment solutions, but also many of them needs the credit and other financial services as well. So we upgrade from Alipay into Ant Financial Group. That way, acquiring this banking license named My Bank that purely operated digitally and to serve the MSMEs. So we developed this approach called 310. Then for the customers, it takes you about 3 minutes to comply the forms, the files online, and it only takes 1 second for the system to identify whether you are qualified for the credit, and there's no zero human intervention during the whole process. So you can see how effective it is. And for our customers, the average loan is roughly about 10,000 USD. So it's quite smaller size. And the average period of the loan is only 3 months. So that's really, they need the money for their daily operations, for the street mom and pops, so on and so forth. So I think that's during the past 2 decades, what have been done. So the question comes, what is the next? What can we do more to serve this certain group? Because our mission and vision is to focus on these underserved groups, and that's where we're from. And especially during this round of the technology, like booming, the AI, the blockchain, tokenization, everybody is talking about it. So we care whether the ordinary people, they can also enjoy the benefits from these high techs. And they'll only be available, accessible only for the richer people, or it can also benefit ordinary people's life. I think that's the direction and what we're trying to exploring on that. So maybe I can stop here for a while and I leave the other more details from the practitioner's perspective for the later round.
Thanks a lot. Yeah, I will get back to the AI topic because it's very, very interesting. But first, we started to talk about the future, and Mr. Mida, you were talking about the 3 potential groups where the financial technology can have a really relevant field. So, what are the products of the future for these groups?
The way I would look at is the future of products would look at, here's the problem you want to solve. So I give example, retirement. So people want to have a simple way to understand, if this is the life I want, what do I need to contribute? And what can you do for me? What consumers want is they don't want to know the complexity. They want you to solve. And that's where, for example, AI comes in, that you can tell this is what I want. Now, technology can go and figure out whether this needs to be invested, how, what kind of products is needed and stuff. People would go from an objective perspective. And what technology can do is, instead of saying, here are the 4 products and these 4 products fit everybody. I'll give you a simple example. Let's say music. What used to happen 20 years ago, there will be labels and you will buy CDs separately. And that is the traditional financial services today. There is a shelf and there are 5 products, you go pick. What's the current generation? Same thing for video. Current generation, you have Netflix and Spotify. You will have an account. And based on your mood and appetite, you get a different content. You're paying a flat subscription fees. And the content gets curated. And the backend is same. Backend for Netflix, for a billionaire and a small student is same. They pay the same. Taylor Swift and you will pay the same money for buying your Spotify subscription. But recommendation and the music you will access will be different. Of course, there may be some limited tracks you can pay extra to get access, but the background will be, the underlying infrastructure will be commoditized. It would be same for the super rich and super poor. The fintechs will build application layers on top of it, where the products can be made for people. They're bespoke, customized. Technology allows mass scale personalization of these capabilities for these people. And that will apply not just to wealth, it will apply to insurance as well. If you see, insurance has been I would say, least innovated. Everybody talks about credit. How many companies you see globally who says, okay, we have created new kind of insurance products from that perspective. And as climate change creates more uncertainty in his life. In US, you find whole areas where nobody wants to insure those houses anymore. So as those things happen, the underlying infra will become public good, and the application layers will be created for bringing affordability for people across asset classes and merging of asset classes as well. The traditional asset classes will not exist from that perspective. The traditional, okay, this is only the investment, this is only the insurance, this is the payments will not exist. Because people says, this is my need. You figure out, this is the music I want. I don't want to know which music label is selling this from which country. This is the music I want. That same transition of personalized access is what fintech will enable across asset classes, across products, across countries.
Thanks. Mr. Biederman?
You've mentioned insurance. I'm a little bit more optimistic on insurance. Myself, I already use apps which handles all kinds of insurances. It's for the moment semi-automated, so they suggest, this kind of insurance you have. Maybe there's a better option, a cheaper option which offers more services. But as I said at the beginning, talking about AI agents, my expectation is that even that question will disappear over time, right? So the AI agent will learn, what I need. Will also, of course, take into account data of other people, and then maybe find out certain insurances which I'm missing. Will know my behavior, my travel behavior, will also adopt to that need. And then maybe I don't need to care anymore. And at best also, which hopefully will not happen, if there are any cases I have to use an insurance because something has happened, also, handle the claim for me and make sure that I'm always secure. And then if you have it already in AI solutions, of course, can be more seamlessly, right? So now the insurance are quite strict and fixed for certain terms. For certain things are covered, others are not covered. This could happen more on the fly, right? So why I need a foreign health insurance for traveling, if the whole year I don't travel for whatever reason, right? So I should, decide this on the fly, what is really needed and what is not needed. Of course, let's also look at the other side. It raises ethical questions. What is this AI agent doing? Does it have a bias? Maybe it's coming from a bank or specific insurance company and always prefers those insurances. Is it okay? Is it not okay? We had that question in other industries as well. But also, we heard about 310 for the loans in the European Union, a little bit other than China, but it's a cultural issue I respect. Of course, we have a lot of issues on the negative things or the risk related to AI and automated credit scoring and so on. In Europe, probably we always want to have as a fallback the manual check, the right to have a manual check if a credit loan has been denied, that you can ask a person to double check because maybe the AI got something wrong, you're an outlier, not covered by the training data in the right way. But let me add one thing. Many of us haven't really thought about this in that vision of having AI agent. So think about marketing. Now, we are used to, companies are used to do marketing towards people, right? So they will have TV spots or in the internet or on app, have all kinds of marketing initiatives. The moment AI decides which products are bought, marketing will be for algorithm, will be totally different, right? They don't need to do TV spots anymore. If anyway, I don't decide anymore which insurance I buy, but my AI will do. And there might be things like maybe one insurance company's overnight, they decrease the price just a tiny little bit, and then all the AI agents of people in need of that insurance will say, oh, wow, there's a good deal, buy, right? So, and then change the insurance contract for 100,000 of people. Might be other issues to the industry. I think we will enter sooner or later this world, which will be totally different than the world we face today.
From an end group point of view, how do you see the role of AI, and how do is it more like for the customer experience, what the customer can see, or more is it important more from an efficiency point of view to decrease the operating costs, or more like in the background?
Thank you for the question. And my short answer is both, maybe. So for the AI, I think a couple of things that we're doing. The first of all, for the Alipay, it's comprised like tens of millions of services individually on this app. And these days, no matter if you want to finding a dining prices or calling a taxi or booking a movie tickets, everything that you can done through this app. But the thing is, so many services like competing services available over there, and it's hard for people to, search directly which service that I would like. So the thing is, we developed this agent AI that you don't need to search through your fingers at all. You just, through the voice messaging type of thing, and very simple like typing command that the service is automatically pumping up to you. So this is like service is finding to you, not you are searching for the services. I think that's the main concept in one way. And just you remember, I think for the healthcare in particular, we also have this agent AI that it helps people that through the whole processing about before you're visiting to the hospital, while you are at the hospital or after your visit, the whole process we can using the AI to accompany you. Let's say you don't feel well today and you don't go to the hospital directly, right? You need to search through your phone that there is a doctor designed for you to simply, provide the information that you want. Especially in China, I think there's still like large differences between the rural areas and the urban. So for the remote areas, that this is especially beneficial. And when you are at the hospital, especially for the elderly people, it's hard for them to find the right places for the blood testing, for the X-ray. That I think we have this agent AI, just a very cute character, and on your phone to get you through what's the next step is navigating you. And after all this, the tests, you get the very difficult to interpret the reports type of thing, and what's the next time to revisit the hospital, and there's a kind of a reminder. So that's just one example how the AI is helping, we say, the ordinary people in their daily lives. And maybe back into the financial services, I think that's another areas that we're also, deploying. And actually, the AI is not a new term these days. Many of the financial institutions are, applying AI on their daily operations, even for their products. But for us, we have this also the financial agent AI that they help you to read the newspapers every morning. And we're saying in the old days when we're called the Ant Financial, our belief is everybody deserves a credit line, no matter your pool, and everybody can build up from the scratch about your credit line. So these days we're saying everybody deserves a buffet that in the morning they can, depending on who you are, to recommend the latest news that serves you, and also can help you to interpret very sophisticated like financial analysis. They help you to reread all the financial informations that the listed company provided into very simply understandable languages that even the elderly can easily see what happened in these companies. And that's several use cases that we're helping to improve. But I would say, so what's the new beauty of this round of the AI, say the large language AI or the generative AI? What's the difference between the previous, like small language AI? I think for us, we believe that the generative AI actually come up from not the segment data, it's the individual-based data that they can purely personalize each each people's, there are certain needs, and it's like lifetime companion. And the more you use it, the better they knows you, and not the certain of needs that within your group, your similar group, but it's you. So I think that's the future dimension that we're working on, and we still believe there is a huge potential on that front. Yeah.
Thank you very much. We are running out of time soon, so I speed up a little bit, but since we are in a central bank, we have to talk about CBDC all the time. It's very important for us. And my question would be, how do you see the role of CBDC from a market's perspective? As in a central bank, we can easily find some business cases where we think that CBDC can be relevant. But from your perspective, what are the fields you think that CBDC can be a good solution for existing problems? Yeah.
So one example is escrow. So whenever you are buying and selling overseas, Ant Financial's original use case was escrow, because it was C2C marketplace. Individuals were buying from other individuals, and somebody needed to secure the money. Now, if you're looking at that for across-the-border transactions, so the foundational money is there, but if you want applications to be built on top, that, okay, here are the rules, and when following conditions are met, let's say this shipment has released, this has happened, then you release this money. So when it comes to creating applications on top of money, whether it's escrow-related, splitting the money into multiple parts, collecting the credit money from the person that, okay, when this gig economy person's payroll is coming, you automatically withdraw this money from. So moment you want to look at all of those collection, dispersal, and a layer in the middle application use cases, those are, I would say, as a real value creation for that, because the traditional money, you cannot create applications on top. It was more, there is internet. Internet was all valuable. The real value of internet happened when you had applications which you could use for those specifically. So I would believe there would be trade commerce related applications. There will be trusted individual applications. So I want to have this money for my older parents, and they can withdraw this, and that X amount of money can be withdrawn by their helper only for specific purposes, as Swapnendu mentioned on purpose-bound money. So if you're looking at remittance, how can you create purpose-bound remittance? So we have this unfortunate example in Philippines. So when Singapore maids are sending money back to Philippines, they don't want to send cash because they're worried that the husband may buy alcohol and stuff. So what they do is they buy vouchers for pharmacies and the grocery stores and send those instead, and school fees vouchers can be done so that they are then confident that their kids' education and nutrition is taken care of, and the husband cannot gamble and drink the money away. Imagine that. There is so much you can do with CBDCs to create those kind of application workflows from that. So those human-related problems is what I believe it can solve. Censorship and all of that is other things, but they're real human problems which it can solve. And I'm focused. I believe that would be something good for the mankind.
I think we provide the tech solutions for that remittance pilot.
Purpose-bound money is an excellent idea. I also read that paper from, I think it was from MAS, right? So because I'm very much against having programmable CBDC programmable money, because then you don't have that unified currency anymore, right? So some, one, let me call it a token, CBDC token, is programmed, so has some side conditions, others not. They are not, exchangeable anymore, right? So, but of course, purpose-bound means there's a wrap. So it's like putting them in a small vault, and you need to have a key for this. But inside the vault is the same CBDC like all the others. So this is a good idea. In general, of course, in practical terms, the retail CBDCs will not bring too much differences in Europe. That's my take, because we have a lot of efficient payment solutions, national, international ones. But of course, there are other aspects. There's a question of if less cash is used, and in some European countries almost no cash is used anymore, then you don't have central bank issued money anymore, and you probably want some, right? So not only commercial money, and want to then you take a CBDC as legal tender, which is acceptable everywhere, right? So there are also some other aspects which makes this, let's say, from a legal or government point of view, maybe a good thing. There's also discussion going on having too much influence of US schemes like MasterCard, Visa, and so on Europe. But as I said, the difference is really a wholesale CBDC. This makes a difference, and I'm very bullish on this. Looking at China, where maybe the retail CBDC introduction is even closer. You know, we have extensive piloting over many, many years now with a lot of activity. Of course, they also had a few specific reasons for introducing it. One, sorry to say, was also the walled garden a little bit from two players, where maybe the banks in China, the largest banks, were not too happy about this, and CBDC, of course, helps to move money out of those walled gardens. But of course, as I said, it's also an element of financial literacy, even offering more payment options. But also here, wholesale CBDC can make a big difference. And I've said before, I like the project of BIS, even Ambridge, even if it's now considered a bit controversial for geopolitical reasons. But yeah, more efficient payment systems, in particular on the wholesale side, this could make a big difference for us.
Thank you very much. And as a very last topic, just a few words about tokenization, because it seems that almost everything can be tokenized, which makes the real economy even closer to the financial sector. So how do you see the role of tokenization in the future?
Yeah, maybe let me add my 2 cents on, by providing a real example that we just launched a project like 1 month ago under the HKMA, the Hong Kong Monetary Authority's sandbox. So the idea is to combine the IoT and the blockchain technologies together. So the problem is, well, we collaborate with a green assets company listed in Shenzhen called Langshine. So their business is they have lots of these EV charging stations in China, because lots of car EVs these days, and they need to find places to build up their charging station. And usually they acquire the capital according to their own credit score on the market. But the idea is for their green assets in a certain region, can those assets can acquire capital on their own creditability? So we work with them, like we put this simple IoT into their machine or the equipment, that this can record the real-time operational data and the situation status, and can upload those data into the blockchain in real time, and to enhance the transparency. And so through this blockchain platform, we have the investors, the professional investors, we have the asset managers, we have the insurance if possible, and the regulations, like if possible, as the dot on this. So everybody, every stakeholder can share the same data, can say what the equipment, the machine it is running, and during the operational real-time data, they can provide how to, enhance their financial services upon that. So I think that's one example, and this is linked up to the wholesale CBDC. So I think for the CBDC, wholesale CBDC still has lots of potential. And when people are talking about the tokenization, the crypto, usually they talk about crypto, these currencies or the financial assets, but the huge potential actually is on the linkage with the real world assets we call RWA. So the physical assets actually can be tokenized and can be transferred to the RWA. And on this trustable, in digital infrastructure, every stakeholders among the financial sectors can work together to provide better services into them. So that's just one case how we look forward. I think still on this front, there are lots of potentials. And of course, there are challenges regarding ethics. But the thing is, we cannot, hold the ties and not the development. I think that's not the concept. So, and our belief is, in face of these new technologies, only the technology itself can help to advance the technologies. So we have this technology-based foundational module that can protect the data privacy computing and so on and so forth to make sure the language model itself is secure and efficient. I think that's my sense.
Thank you very much, and thank you to come to Budapest and to share your views on these important topics. I'm a little bit sad that we have to stop here, but it was very nice to chat with you. I hope all the others in the audience also enjoyed, as I enjoyed, and have a good lunch, but probably our presenter will tell you the details. So thanks a lot.
Guiding us through this session on finance, and I can only echo your words. Thank you to all the participants as well for sharing your valuable insights on this topic. Dear audience, now we are going to have a lunch break. Then we move on to the next session of today, focusing on technology. For our guests who are here with us at the venue, we hope that you will enjoy this reception and you will have the chance to further discuss these interesting topics with all the participants. Thank you and see you again soon.
We live in an era of globalization, and we have never been so connected with each other. The world today is incredibly integrated in areas ranging from trade and technology to people exchanges.
I remember in 2008, when Beijing was holding Beijing Olympic. The slogan then was "One World, One Dream." That exactly symbolized the globalization. And we found it was really a great time and occasion to establish our think tank, Center for China Globalization, CCG.
Through our efforts over the past 15 years, CCG has become one of China's leading think tanks and is internationally recognized. CCG is the only Chinese think tank to be granted official special consultative status by the United Nations as a non-governmental organization, and ranked 64th out of the top 100 think tanks worldwide in 2020 by the University of Pennsylvania Think Tank and Civil Society Program. CCG has nearly 100 full-time researchers and employees, and we have also been designated as a postdoctoral research center by the Chinese government.
So the motto for CCG is that global vision for China and Chinese wisdom for the world. So we strive to be a leading think tank for building a bridge between China and the outside world. We really seek to communicate, seek to hear, but also seek to understand.
As an international think tank, CCG is committed to researching important global issues. We have participated in and influenced the creation of multiple policies on national development and global governance, supporting and driving innovation in China's decision-making process and institutional environment. We also strive to build consensus and provide suggestions through Track 2 diplomacy, as well as various seminars and high-end forums. CCG's team of experts also proactively engages with the international mainstream media to share their views and China's story with the world. In 2020, CCG launched the Global Young Leaders Dialogue, also known as GYLD. The program serves as a bridge between young leaders around the world and promotes international exchange. The program has been widely recognized both in and outside of China, and in 2021, Chinese President Xi Jinping responded to a letter written by GYLD participants, recognizing the success of the program and encouraging young leaders to engage more with China.
To launch the GYLD Wise Demo campaign last year, to encourage young people worldwide to come up with innovative solutions on global issues.
I also want to specifically call out Henry and commend him for, as the president of CCG, for his leadership, his passion, and great intellectual acumen in driving CCG to become perhaps a best-in-class think tank.
Thank you for a very constructive, generous, and sharp yet warm dialogue that we've been able to have.
Henry, I think it's extremely important that we have conversations like this, and that through the unofficial channels of academia.
We are now living a very complex and very challenging world. I mean, we are now in the 21st century, but human being has met unprecedented challenges of climate change and also pandemic, and also, of course, the geopolitical risk. But I think it's important that to have a think tank to really think globally and act locally, and also the think tank has to really have a vision. So I think for CCG, our future vision is really to build up this bridge to connect China and the world, to really be a global communicator, a global bridge builder, and a global dialogue platform